China's exports gain steam though outlook stays unsure. China's export growth suddenly picked up velocity in July, offering an encouraging raise to the economy as it struggles to recover from a COVID-induced droop, however weakening global call for aught to begin to tug on shipments in coming months. Exports grew 18.0% in July from a year in advance, the quickest pace this year, official customs records showed on Sunday, compared with a 17.9% rise in June and beating analysts' expectancies for a 15.0% gain. Exports have been one of the few bright spots for the Chinese financial system in 2022, as widespread lockdowns hit corporations and consumers hard and the as-soon-as-potent property market lurches from disaster to crisis. China's export increase surprised again on the upside. It continues to assist China's economic system in a difficult year as home demand stays slow, said Zhuwei Zhang, leader economist at Pinpoint Asset Management. However, many analysts have anticipated shipments to fade amid cooling worldwide consumption. An international manufacturing facility survey launched remaining week confirmed call for weakened in July, with orders and output indexes falling to their weakest levels since the onset of the COVID-19 pandemic in early 2020. China's Respectable Production Survey indicated activity gotten smaller closing month, raising fears that the financial system's restoration from lockdowns in spring could be slower and bumpier than anticipated. But there had been symptoms that transport and deliver chain disruptions caused by COVID regulations were persevering with ease, simply in time for shippers making ready for peak year-end buying demand. Foreign exchange container throughput at 8 essential Chinese ports rose 14.5% in July, rushing up from the 8.4% benefit in June, in line with statistics released by way of the home port affiliation. Container throughput at Covidete Shanghai Port hit a file high in July. July exports may have been buoyed through pent-up call from Southeast Asia as supply snarls eased and factories there ramped up production, Bruce Pang, leader economist and head of studies at Jones Lang LaSalle NYSE, JLL, Inc., said in a studies notice. Moreover, amid surging inflation, a few European and U.S. customers might also have front-loaded orders heading into the holiday season to make certain they had items reachable, he introduced. Still, at the same time as export boom remained excessive, mainly subsidized by using rate factors, the quantity of exported items dropped in July, mentioned Chong Ran, a senior analyst at Zhixin Investment Research Institute. Looking in advance within the 2D one-half of the year, exports are anticipated to be resilient within the brief run, but weakening external demand may also strain them within the fourth zone, Chong stated. Imports still tepid after a shaky 2D zone. Most analysts have predicted China's import momentum to choose up modestly in the latter half of the year, supported by using construction-related device and commodities because the authorities ramps up infrastructure spending. But imports' ultimate month had been once more weaker than anticipated, suggesting home demand stays soft. Imports rose 2.3% from a year earlier, in comparison with June's 1% advantage and missing a forecast of a 3.7% upward thrust. Despite an uptick in domestic demand amid loosening COVID manipulate measures, the susceptible overall performance of the production side dragged on imports, mentioned Xu Shuzheng, a researcher at CITIC Securities, adding that clean COVID flare-ups ought to hinder the economic system's healing. Crude oil imports in July fell 9.5% from a year in advance as gasoline demand recovered extra slowly than anticipated because of virus outbreaks. The quantity of imported included circuits of first-rate Chinese import also dropped 19.6% in July from a 12 months in advance, in step with calculations. That can be an additional red flag for exports, as a tremendous quantity of the U.S. imports are components for goods that are then re-exported. China posted a file $101.26 billion exchange surplus final month, well above the $90.0 billion surplus analysts had expected. The country's top financial planner stated closing week that the economy is within the essential window of stabilization and healing, and the 0.33 quarter is important. Top leaders recently signaled they had been prepared to overlook the government growth goal of around 5.5% for 2022, which analysts mentioned have been searching more and more not possible after the financial system narrowly prevented contracting inside the second area. The International Monetary Fund in late July sharply reduced its 2022 boom forecast for China to 3.3% from 4.4% in April, mentioning COVID lockdowns and the worsening disaster within the United States of America's belongings area.